What's going on, guys? This is Foresight Trading, and today I'm going to show you one of the most powerful yet simplistic options trading strategies out there. And this is an often overlooked strategy because it's not going to provide you the sexy 500 to 1000% returns in any given year, but it will help you beat the market consistently year in and year out by a small margin. So again, you're not going to become a Wall Street or a hedge fund trader, but it is something that can help you grow your account exponentially over time. And we'll take a look at some compound interest calculators to show you just how powerful it can be. Now, this strategy involves selling covered calls on ETFs that follow the overall stock market. So today we're going to use SPY as our guinea pig to see exactly how much you could expect to beat the market by on a consistent basis, and then see how much that can actually grow your account exponentially over time. And all that I ask is that you give this video a thumbs up and consider subscribing if you love the content or if it brings you value, so that I can know to make more content like this in the future, as well as so other people can see it more broadly across the platform. And so we'll dive right in here to the SPY options chain. And as we know, SPY follows the S&P 500 ETF, or SPY is the ETF that follows the S&P 500, I should say. And we're going to go right in here and open up selling calls. Now, I mentioned that this is going to be a simplistic strategy. So in order to sell calls against any stock, you're going to need to be able to buy 100 shares of that stock or more, and ideally buy in increments of 100 so that you can maximize the amount of options that you can sell against your shares. So in order to buy 100 shares of SPY, you'd currently need about $34,000 in your account. If you haven't reached that level yet, check out some of my videos where you can grow your account pretty quickly by doing things like selling credit spreads or using the wheel option strategy. But if you are able to actually buy 100 shares of SPY, I'm going to show you a strategy that you can use to boost the overall returns. Now, I've pulled up here an article from Investopedia, and they have pegged the SPY performance at about 8.93% annually since inception, and during the bull market it's been a little over 11%. Both of those are overall great returns, and 9% is in line with what you can generally expect from the overall market. So SPY follows the market very closely. What that means is that you just need slightly higher than 9% in order to quote-unquote beat the market. Now, beating the market over the long term is never easy, but it can be done with this simple strategy. You're not going to beat the market by 3 or 4 times every year like some of the outstanding traders that are out there, but beating it by even just a couple percentage points a year can have a really exponential growth pattern on your portfolio, as we'll see a little later in the video. And so I mentioned again that this strategy is going to be simple, and we're going to simplify things as easy as we can by actually simply trading this option 12 times per year. So we're going to look at doing about 1 month out from the current date. Currently we're October 8th, so we'll look at November 9th options. And as we can see here, we've got a ton of options that would collect us some really nice premiums, but we're going to go for about a 90% chance of profit. That means very rarely will we ever need to sell our SPY shares and then rebuy them, and we can still collect a nice return. In fact, for our $34,000 initial investment, we would be able to collect about $117 every single month from selling this particular strategy at a 90% chance of profit. Now, of course, over time, these numbers are going to change, both the level of premium that you can collect as well as the price points. But all we can really work with is what we have currently. So remember, you're not going to need this $36,000. You're actually going to need the $34,000 that it would currently cost you to buy 100 shares of SPY. And you're just going to sell way outside of the money calls. Now, $117 a month doesn't sound like a lot, but let's pull up and see what that would be like on an annual basis. So we would collect $117 12 times per year. That's going to give us a total income on our shares of about $1,404. And remember that we have an initial investment of about $34,000. We'll actually just go ahead and round it up to $35,000 because that's the value I'm going to plug in to the compound interest calculator. So if we see here, that means that we're going to earn about 4% extra returns every single year simply by selling a covered call against the SPY contracts that we own. And the level of premium will scale over time. So of course SPY over time is going up by about an average of 9% per year. And the level of premium that you'll be able to collect scales with that, as options traders need to make a return on the risk that they're putting for selling their shares. And so you don't have to worry that that $117 per month is going to stay stagnant, but the price of SPY could be $500 in the future. That level of income will also scale with the stock. We'll also go ahead and account for the fact that we're going to lose about 10% of the time, and we'll just go ahead and round it up and call 15%. So overall, we'll say that you can expect to earn just a little over 3%, pretty close to 3.5% above the market returns per year by simply selling covered calls against an ETF that follows the market. Remember, it averages just about 9.8% per year. So I've actually opened up a compound interest calculator here from NerdWallet, and I simply plugged in an initial investment of $35,000. You never contribute to this again, meaning that you're only reinvesting your compound interest from your profits from SPY compounding over time, as well as your income that you're collecting off of this particular investment. Now I plugged in a 40-year time horizon, and that seems like a long time. My average viewer is actually in the 25 to 34 age range, and so that would put you as a 25-year-old right up to retirement age, where you would begin withdrawing this money, and as a 34-year-old, a couple years into retirement age, but still not out of the question for being an active trader. And I've plugged in here an 8.75% return compounded only annually, and as we can see, it just so happens to compound to just about $1 million over a 40-year time frame with just the average annual return of SPY. Remember, if we pull that up here, it's 8.93, so I've actually rounded it down. If I plugged in 9, it would be even more exponential, but we'll be conservative here and say that 8.75 because there's going to be some fees and some years that it could underperform over time. So we've got just about $1 million here. Now if we plug up our calculator here, we can see that we're earning about 3.4% above the market. So let's just say that we're going to earn, instead of 8.75%, an average of 11.75%. Not entirely crazy. You're not going to be offered a job immediately at any big hedge fund by earning just a couple percent more than the market, but if you can consistently do this in the long term, that $1 million turns into almost $3 million simply by slightly outpacing the market return every single year. Now, some years you might not beat the market by much, and some years you might underperform the market. Remember that you're going to lose some of your capital in some years because the market will be down and then will be up 20% in a given year. So that actually skews this equation a little bit, because you're going to win more than 90% of the time in a down year, because remember, you're selling covered calls above the current price, meaning that you need the price to go up in order to be called away from your shares. So if the market's actually down, you're probably going to win 95 to 99 or maybe even 100% of your trades any given year, while the next year, if the market is rising 20%, you might lose some of those trades. And so over the long term, that 8.93% is averaged out among all of the down years and all of the up years. That's skewed a little bit from a compound interest calculator, because this just assumes a flat line return of 8.75% annually with no down years and no up years, just a linear 8.75%. As we can see, it's not so linear on the growth, but that's because of our best friend compound interest. So these numbers aren't set in stone by any means, but it's important to understand the concept that simply selling covered calls once per month can allow you to collect a return that can triple your money over time. And you're not going to outpace the market by that much, but you don't need that much to outpace the market by when you're able to consistently do it over the long haul. And let's just say that your investment time horizon is closer to 30 years. That's a realistic investment time horizon for someone on the slightly older end of my average viewer age, still turning just a $35,000 investment into $433,000. That's to be expected if you were to just invest in the market and do nothing else. That would be just holding SPY, not actively trading it, never buying another share of SPY over your entire life. And we'll plug in the same equation here and say that we outpaced the market by just 3% per year on average. Again, we're growing to almost $1 million here. So no matter which way you cut it, you're going to earn anywhere between nearly 2 times to 3 times the amount of money simply by selling a covered call once per month. It's almost the most simplistic strategy out there because it's a trade that you only have to make once a month. You don't have to actively sell cash secured puts every day and then sell covered calls and manage your portfolio. You can simply own SPY, sell a call once per month and forget about it and come back the next month and do it all over again. And for those rare months, that 1 out of 10 months that you're called away, well, look how much SPY has to go up for you to actually be called away. It has to go from $341 per share all the way up and close 1 month from now at above $366. So $25 per share on a $3,600 or a $360 stock, as we can see, is going to be, and remember it was actually $344, that means that the market's going to be up 8% in a month. Now, that's very rare that the market's up 8% in a month and doesn't have a sort of pullback, because I can already see people out there saying, well, now you're going to have to buy back your 100 shares at a much higher price. And that's true. Your average cost of SPY will go up over time as you do get them called away occasionally, but it's very unlikely that you're going to get called away with SPY being up 8% and not have any sort of retracement over the coming weeks, where, again, if you're called away in the future, you could buy it back at a lower price. So yeah, SPY is going to go up over time, but remember, when you're called away, you've also made that money. So between $340 per share and $360 per share, you participate in all of that upside when you're selling covered calls, and you only lose what it trades above. For instance, $366 per share. So let's say it went to $370. You might lose $3 or $4 per share on SPY, so $400. But remember, you collected $117 for many months before you were ever called away and lose any amount of money. And so just something to keep in mind when you're trading SPY. I can already see the comments out there saying, well, you're going to have to average up over time. And yeah, you might lose a couple dollars here and there, but over the long haul, you're absolutely going to outpace the market. And we went conservative on the level that you're going to outpace. We accounted for the losses. And so it's an absolutely great strategy to grow your account exponentially in your later trading years. And if you can consistently do this over your trading career with just even a small portion of your money, you've already seen that you can turn $35,000 into $3 million. And it sounds crazy, but that's the power of compound interest and trading a simplistic strategy like this. So again, I really hope that this video brought you some value and gives you something to think about. And if it did, remember to give it a thumbs up and consider subscribing. Thank you all for stopping by, and catch you in the next one.